All right, we are more than at session lows right now. A lot of this is the so-called smart money. That's always in the eye of the beholder. If you consider just someone who's a gazillionaire and they're warning about interest rates going up in an environment like that, the smart money. But when it's someone like a Stanley Druckenmiller or some of these others who have been warning about whether it's wise in this environment to even think about raising rates, and you combine that with a potential government shutdown later in the week that might or might not drag on for a while, and then the concern that Goldman Sachs and others have raised about the potential for a slowdown, if not an outright recession next year. Never mind that many of those same firms, I might point out, have been wrong about the run-up that we have seen. Add it all up, and there's concern that's sending stocks down about 356 points as we speak. Let's go to Dennis Gartman, an excellent market read. I put him in that smart money crowd. So, Dennis, what are you seeing now that, you know, the markets have in the past just sort of sloughed off? What are they not sloughing off now?
What they're not sloughing off, Neil, is the fact that the Fed, it's not that they're tightening monetary policy with raising interest rates, which whether they do or do not raise the overnight Fed funds rate on Wednesday is, I think, inconsequential. What people are not paying attention to and what they need to pay attention to is that the Fed, through the adjusted monetary base, without getting too esoteric, that's the Fed's holdings of Treasury securities, have been rolling off now for 3 years. And you had an increase in the Fed's holdings of Treasury securities from 2008 to 2015. You needed that to sponsor both stronger stock prices and a stronger economy. Now you have a lessening of the fuel supply. The economy is doing quite well, but with a lessening of the fuel supply, one of the two has to fall, and the fall is the stock market. This still has farther to go. I trade only for my own account. It's a few millions of my own money, but I have been short, and I have just, this morning I got shorter when the Dow got back to unchanged, and I have no intention of changing that position at this point.
That's interesting. Short, I mean that you're betting the market will go down. So with a 10-year note at around 2.87%, a 5-year 2.71% thereabouts, a 2-year at 2.71%, and overnight bank lending rates at around 2.5%, that's as tight as a tick.
Well, let's put it into proper context. I've been in this business since 1972, so I can remember when the overnight Fed funds rate was consistently above 20%. I can remember my own first mortgage well above 10%.
I thought I was the only Methuselah who bragged about that. You know?
And I do remember when the long bond was at a 14.25 coupon, and you couldn't give it away. So the fact that we have raised the overnight Fed funds rate to where we have, it, to me, really is not.
I guess what I'm saying, Dennis,
consequential.
That normally heralds, if it all holds, a slowdown at a minimum, maybe something worse. What do you say?
I think that by the first quarter of next year, we'll find that the economy has slowed at least for 1 quarter. Maybe we'll have 2 quarters. We're going to have a recession. It's long overdue.
Next year?
Will it be anywhere near as serious as what we went through in 2007, 8, and 9? No, it will not. We don't have the same sorts of bubbles, the same sorts of overextensions. But are we long overdue, and has the Fed tightened monetary policy, and is the Fed tightening policy as it allows its monetary base to roll off? Yes, and that probably bodes ill for the economy going forward.
So that recession, which technically you'd have to have 2 contracting quarters in a row, you see a good possibility of that happening next year?
I think you'll get at least 1. You might well get 2. And always remember, the NBER didn't understand that we were in a recession in 2007. They didn't announce it until 2009. They didn't even know we were out of recession until 2010. Very true. So they're very slow to make that decision. Will we have a quarter at least of lesser GDP growth? Almost certainly. Yeah,
they always realize it after the fact. Poor George Bush Sr., I thought of him, you know, where we were coming out of the recession at that time in '92. It was too little too late to help him in the election. All right, Dennis, we'll see what happens. Thank you very much, my friend.
Thank you, Neil. Thanks for having me on. Always my pleasure.
Same here. Dennis Gartman, a fine mind. He's very modest about it, but he has an uncanny ability to read turns and twists. And whether this is significant is anyone's guess.